Hello guys, and welcome to another video. Today we're going to talk about trend lines and the importance of them when trading technically. So how important are trend lines? Trend lines are super important. Why are trend lines super important? They help us connect higher highs, higher lows, and lower highs and lower lows to form channels uh, or basically to provide us with which way trend is going right now. So if we, like in this scenario, this is Euro USD on the 1 hour. If we connect the low to a higher low to a higher low, we can see that once we get to the trend line, we have either two options. We can either break through, retest, and drop, or we can retest the trend line and go up. Okay? It's very simple with the trend lines. The trend lines also help you discover other patterns, such as triangle and wedges. Okay? They are the nucleus and base of a lot of the patterns when we trade, and it is very, very important to be able to identify them properly. You can use them on all time frames, but just like everything else we've discussed so far, the higher time frames you use them on, the higher time frame you use it on, the more, the bigger the take profit and the bigger the stop loss you have to use. Okay, and the more effective it is. Also, they are very helpful because we can use trend lines when following the trend. For example, in this scenario, Euro USD was in a bearish trend for a couple of months. We were looking for reasons to sell. So in this picture, we can see that we connected the low to the higher low, okay? And we were waiting for a break of this trend line and a retest. Also, we had a trend line coming from the top connecting lower highs. So we had the high here, we connected the lower high here, and we connected the lower high here again. So in this scenario, what do we do? 1, 2, 3 is usually the strike zone. This is why we call it the 1, 2, 3 break. What does this mean? Usually it means that 1, 2, and 3. On the third strike, you want to enter. You want to put your stop loss a bit above the previous high or the previous low, depending on which way you're trading, and that's how you want to trade it. So in this scenario, we know we're short. We're looking for reasons to sell the euro versus the dollar. So 1, 2, and 3. We also had extra confirmation here. 1, 2, and 3. So a break and a retest. Now, this day was a bit of an abnormal day. It was a day of ECB minutes. Okay, but it's also important to note that putting your trend lines on your charts and always extending them can show you that price doesn't just reject random areas for nothing. Okay, in this scenario, when we extend our trend line, okay, and we wait for the break and the retest, we get it right at the top. Okay, the news comes out, the market makers push up the price a bit high, but then we can see that it cleanly rejects it all the way down for a solid 250 pips. If you're one who likes volatility, this would have been a perfect day for you to enter. Okay, now how do we place our trend lines properly? There's a lot of people that place them from wicks to wicks. There's people that place them from the closing of candles to the rest of the closing, from the opening to the opening. Everything is different. How do we trade the trend lines? We put them from wick to wick. Why do we put them from wick to wick? Because we believe that it allows us to scan the markets the cleanest possible way and get the best possible entries. Okay, so in this scenario, 1, 2, if we hadn't put our trend lines on the wicks here, we probably wouldn't have gotten as clean of a trade as we did here. Same as here. If we didn't put our trend line from our wicks to our wicks, we wouldn't have gotten the clean trade that we got here for 50 pips. It's important to place them from wick to wick to get the cleanest trade possible. But as everything else we've mentioned so far, it is important for you to backtest everything and realize what works for you and what works for us may differ. So we're going to go through a few examples in detail and why they played out. This is Australian dollar versus US dollar. So we have our 1 and 2. We have our lower highs. This is our first high, our lower high, and our lower high. Okay? So we connect these 2 points from here to here, 1, 2, and we wait for the strike zone. Where is the strike zone? Here. We can see that when we entered here and placed our stop loss above here, we had a good risk to reward ratio in regards to the trade we took. Now, usually we wait for a 1, 2, 3 break. What does the 1, 2, 3 break mean? So 1, 2, 3. And normally candles want to break and retest this trend line and continue to go further up. In this scenario, it didn't play out, but it's okay. The US dollar has been really strong this year and it has no signs of slowing down up to this point. 1, 2, 3, 4. It's important to notice that once we do break this trend line, it'll probably be a very significant break and we'll probably have lots of room to the upside. Okay? We can see that we cleanly drew them from wick to wick to wick. And we see how we could get a 4th trade out of it if we really wanted to. Okay? Now, I'm not saying it always happens. Okay? This is also on the daily chart. But it's also always important to pay attention to the price action. So the trend line, it's not is to be combined with fundamentals and candle action. So we can see we have bearish tweezers here. So we have one bullish candle and one bearish like this, and we can move down like this. Okay. Now I know analyzing it in hindsight is always looks perfect, but I'm just showing you guys 1, 2, 3 why you should always put your trend lines. All right. The next chart, an example we have is pound versus New Zealand dollar on the 1 hour. We can see that we draw our trend line from this point to this point. Okay, so we have touch number 1, touch number 2, and touch number 3 here. So we would draw it from here to here and extend it, only to wait for touch number 3. Touch number 3 came, we formed an M pattern at our resistance. Okay, and what do you know? We dropped like a bomb, like a rock, pardon me. So 1, 2, 3, fall. And we can see that even though we've been edited out, we can see that price actually breaks the candle. And if we backtest this example, we'll see that we actually break and go higher. Okay. Now, again, remember the wicks, remember the 3rd strike. Okay. And remember the trend. Always. Right? This is Euro USD on 4 hour. We're still looking to short this. So we can short it we draw the trend line from here to here. So 1, 2, and some may ask why to this and not why to this. Well, if we draw our Fibonacci retracement from here, from this swing high to this swing low, we can see that the 61.8 is around this level, meaning that is a perfect place to drop from. All right. Now, 1, 2, we can see this is the strike zone, and boom, we fall. Okay. Now, here we have a triangle pattern with these 2 trend lines. So it's important to notice that because we're looking to short the euro dollar, we can see that we have 1, 2. You can see that we have the 3rd bounce, which goes cleanly, and we know that the next break, okay, we know we want to short off here and see if we can get a continuation pattern by breaking this trend line. And we do it in this scenario. It will be important to see how this pair reacts in the near future. Thank you guys for listening today. I hope you enjoyed, and stay tuned for more.